Do you believe that a trade war can and will escalate, and what does that mean for yields?
Well, I saw the headline was trade truce, so that's a change from last week. In the space of a few days, Francine, we seem to have gone from war to truce. This has always been a possibility that something would happen, but it strikes me that the real story going on is in the economic data and elsewhere. I think that this is a distraction from some of the more enduring themes in markets, and so I'm not that worried about this.
Okay, so, I mean, this is a distraction, but could it turn ugly? You say you're not worried. If something, I guess the markets were a little bit anxious because you don't exactly know how the Chinese will play, you don't exactly know what the Trump administration will do next. If it does escalate, does it actually shave off GDP?
Well, I'm thinking about it from a bond perspective. I wasn't really answering the question in the context of what happens to equities or emerging markets or credit. For me, if you look at the main bond markets and US Treasuries, for example, presumably, if you reduce the growth expectations, it will pull yield down. And actually, if there was any short-term inflationary implication, i.e. upward pressure, it would be seen as transitory by the main central bank. So in my mind, it suggests lower yields, not higher, and it's really not good news for the more overvalued, risky asset markets. And I would start with credit, where spreads are tight and the markets are vulnerable, and I would continue with equities, and in some cases we have to refer to emerging markets. So it's not good for risky assets.